Domestic and international stocks finished the year strong in December. The S&P 500 returned 3% for the month and 31.5% for the full year, its best annual performance since 2013. International stocks, as measured by the MSCI ACWI ex-US index, returned 4.4% in December and 21.6% for the full year. The market's end-of-year strength was supported by headlines that we talked about throughout 2019, namely monetary policy and trade negotiations. Investors were encouraged by the Phase 1 trade agreement reached by the US and China. The deal will see China increase purchases of US goods by $200 billion over the next 2 years, while the US will cut in half tariffs imposed in September on $120 billion of Chinese goods. There was, of course, some political drama here in the US last month, but markets showed a muted response to the House's impeachment of President Trump, which passed almost entirely along party lines. Also, the Federal Reserve unanimously voted to leave interest rates unchanged in December and indicated that rate changes will likely remain on hold through 2020. The Fed's monetary policy certainly pivoted in the past year, as evidenced by the 3 rate cuts during 2019 versus 4 rate hikes in 2018. Although the central bank seems to have found its desired benchmark borrowing rate, the Fed continues to adjust the size and composition of the securities held on its balance sheet. Buying and holding Treasury securities is a way for the Fed to inject money into the financial system and ensure smooth functioning of the market for repurchase agreements, also known as repo. Repo is a key source of overnight funding in the financial system, and the interest rate on repo briefly surged in September, reflecting a shortage of liquidity. We illustrate the Fed's balance sheet in December's chart of the month. As we can see, the Fed's multi-year balance sheet reduction reversed course in September 2019 as the Fed began to provide additional liquidity to support repo markets. For more on this and fund performance in December, please check out our new monthly investment report, which is now live.